Good morning, everybody. Welcome to Thursday and welcome to episode 107 of the FinTech Insider Breakfast Show. As you know, in this show, we bring you the best and the brightest from around the FinTech and banking landscape every single weekday straight to your homes at 8:30 BST, apart from on Mondays and Wednesdays when we go live at 3:30 BST or 10:30 ET for our US friends. And as you know, both shows go live right here on LinkedIn. Today's topic is the UK's eMoney safeguarding regulations and how these have come to the fore, certainly after what happened with Wirecard and the Wirecard incident. And joining me today is Nigel Verdon, who is the CEO of Railsbank. Nigel, thanks so much for being on. How are you doing?
Good, thanks, and thanks for the invitation again. It's great to be back on the show.
It's a pleasure. And where are you dialing in from? Because we've had a continental theme sort of running through the week, and this is no exception.
I'm actually in France at the moment, but as I was caught here in lockdown, normally based in Singapore, and I've just noticed the trailer on the screen. My colleague Ned is on your show soon, so from Bamboo. So I'm meant to be in Singapore, but I'll be going out there again in beginning of September.
Yeah, I'm speaking to him tomorrow. And actually, we had Dov Mamor as well from Railsbank, who's your COO over in the States, and he was on last week. So this is, we're getting around your whole company at the moment. It's cool. Listen, as always, we love getting your comments, so leave them in the sidebar, and we'll answer any comments and questions that you've got throughout the show. So Nigel, just really quickly before we get into the meat of the conversation, just a little bit about yourself, your background, and how you've become the CEO of Railsbank.
Sure. 3 times fintech entrepreneur. First company I founded was in 1996 called Evolution with 3 other colleagues, 2 from Goldman, 1 from ABN AMRO. And that was when this internet thing appeared in the 1990s. And previously, I was at Swiss Bank when we did the very first foreign exchange trades on the internet. So we took that expertise to help Goldman, Morgan Stanley, Merrill Lynch, and most great and the good. And it was sort of like an 11FS in the capital markets, essentially, is the best way to describe it. but without all this wonderful podcasting or anything else like that, we were still, mobile phone was the most exciting thing we had in those days. Then I got brought in to turn around the equities business, part of the team turning around the equities business of Desna Kleinwort. I met a colleague there called Sean Park, if you know, from Antimus, who's the founder of Antimus. And we ended up running their business called Digital Markets. And then we left, and Digital Markets formed the thesis of Antimus as an investment fund and the thesis of Currency Cloud, which I founded in 2007. And Railsbank is the latest business. It was just founded out of the frustration that the first wave of fintech about how to get platform banking that we just couldn't get from anywhere. As ourselves, Christian Tarvet and TransferWise, Mike and Co from Azimo, everybody pretty much, who came, Revolut guys and things. So we decided to go and build it. When Currency Cloud was on a good trajectory, Mike Laven was doing a good job as CEO. And so it's time to look at where the next wave of fintechs coming in. And hence we founded Railsbank with my co-founder. Have actually known each other since we're 13 years old. We went to school together. Together.
That's amazing.
Like your colleague, he was a submariner for a while. And and then he joined my first company, and then was CIO of Board Measure, 14,000 person company in the UK. If you know Butland's Warner Holidays and things, he was CIO there. And then we founded Railsbank.
That must be awesome to start a company with somebody that you've known for that long. Is incredible. Probably quite rare, I would have thought, but that's amazing.
Actually, a lot of the Railsbank team were part of my first company. Our CTO was, our chief architect is also the CTO of Currency Cloud. And the Dov I used to work with in Currency Cloud as well.
Right. Okay. Cool. Let's move on to the topic that we're talking about today. So, for everyone, I mean, most of the people who listen to this show will know that we've also done extensive analysis on what happened with Wildcard, and will probably know the story behind it. But for those of you who don't, just super high level. So, end of June, obviously, Wirecard were found to have balance sheet anomalies, should we say. So sort of overnight I think it was on a Friday, the FCA suspended transactions for those providers that used the issuing services of Wirecard, which meant that those who had accounts with, let's say, banks like Curve, Pocket, and eMoney couldn't access their funds. So that, and obviously couldn't make transactions. So across the weekend, that continued, and then I think it was on Monday, even though they were expecting it to happen sort of later on in the week. On Monday, it was rectified, sort of Monday going on to Tuesday. But there was a period of like a 48 72 hour block out, and that was really enforced by the FCA, and that's kind of where we look at what regulations are in place to sort of safeguard clients' money through that period, which is why the eMoney safeguarding regulations have sort of come to the fore, and you yourself have been quite a leading light in terms of directing what potentially could happen going forward. So I suppose first up, given that context, could the regulators, in your opinion, I suppose, have avoided the implications of that weekend and the suspension, obviously, and the effects that therefore had on Wirecard users?
Sure, I think the FCA was in a sort of no-win situation, so they took the best worst situation basically. And personally, I think they actually did the right thing, even though the consequences were the impact of it was not good. What the situation behind it is the eMoney regs are in conflict with what's called the Companies Act and the liquidation parts of the Companies Act, which means that any money you hold at that point in time, and there's been subsequent releases by the FCA on this, that any money you hold, if you've got 1 cent of non-customer money in there, or 1 pence, etc., you've got a situation where the liquidator can say that's not client money and can go to the creditors, which is a crazy situation to be in. And it's because I think the regulator and Parliament haven't fixed the conflict in those laws. To be honest, it could have been fixed, but it's been known about for a long time. And we've communicated, the whole industry's communicated on many times of the issues there. So that's one thing and so there's also some wildcard funds would also have been held in accounts outside the UK, possibly with banks that were creditors to Wirecard AG at the mothership. And so they wanted to make sure that those funds can be repatriated because of any claims against them. So the FCA was acting in the interests of the consumer, even though it seems bizarrely it wasn't. It was actually in the interest of the consumer to make sure all funds were in the UK under their jurisdiction, and that there was no client money commingling in those funds to ensure that if Wirecard went into liquidation, all clients would be protected. And because they were fighting against the fact that this conflict between the UK legislation, that is why they're in this sort of, they took the least worst decision, which was the right decision to do that. Now, we can all look back, and hindsight is an easy thing. You can fix everything with hindsight. In reality, I think that the legislation does need to be fixed and bring it under trust law. Very much like in the asset management and securities world, also regulated by the FCA.
Ooh, we seem to have lost Nigel in full flow, and we will look to get him back ASAP. That's a shame, because he was talking about something which was really interesting. And I was going to ask him, listen, get your questions in, because as soon as he comes back, we can give your questions to him. But a shame we've lost Nigel just for the moment. What I would say is, and what I'm going to ask him about, I suppose, after this, the things around whether the eMoney laws are sort of are so new, I guess, that that's really become what we would call the conflict, as in it hasn't had the opportunity, I suppose, to evolve in such a point where we can actually we can do that much about it. But let's try and get Nigel back as soon as we can. In the meantime, please get your questions in. If there is anything you want to ask him. Nigel, I think we're back.
Hey, good. It's just an internet hiccup this morning. It's like Google's down this morning as well.
I've heard. I think the world is conspiring against us. After you left, I tried to just like monologue on for about 30 seconds, and then I got cut as well. So,
Okay.
but we missed you in full flow. What you were saying was super interesting, and I think you were about 3/4 of the way through, just starting to talk about trust law and the difference in the laws. So, if you could pick up from that point, that would be amazing.
Sure. There's a very good client money protection scheme, which is the CAS regulations that already exist on the FCA and things. And we're just surprised why those weren't essentially used under UK trust law, because then it's perfectly clear. And the FCA actually released some guidance literally, I think, 3 days after I made a public statement on it. And I don't know whether they're annoyed at me making a statement or they planned it. I guess that they planned it, because there's smart people there. Yeah. So there's other bits in the legislation makes it very difficult, where you got to classify funds as relevant, non-relevant. There's a whole load of overhead that makes it actually quite difficult to hold the money as well. And there's other pieces where, especially which hits all the foreign exchange guys in the market, where you've got to confirm that the funds have arrived at the receiver before it's not client money, and you could be going through several counterparties or several banks, especially if you're doing international payment. And the fact that you've got again pre-GPI, you've got no way knowing that the money has arrived. UK faster payments, you have no idea it's arrived. It's a fire and forget. And so there's all these things. The legislation needs, I think, to be brought into reality of operations. Otherwise, you've got coverage on it. So you've got to then put your own capital there, and there's no sort of real guidelines on how long you got to hold it to refer to it, because you then got to contact every single person who's received a payment. Have you received it?
Yeah, so, I mean, sorry. Yeah, I was just going to say. I mean, I was just going to say from. Obviously, those banks or those services, I should say, that are underpinned by Wirecard, obviously aren't covered by FSCS, which is sort of why this is happening. Do you think, given the eMoney phenomena and given the fact that it's a relatively new phenomena as well, certainly insofar as the EMRs are concerned, do you think there should be sort of a reciprocal scheme? Because although the guidelines suggest that client money should be segregated and obviously not used, and in theory, a lot of the big practitioners in theory do obviously follow those guidelines, but do you think it's just literally this is just born out of the fact that eMoney now is such a thing that law needs to just catch up with it?
So it's also, if you look at it in reality, it could be a PRA regulated banking light without lending. So it's pretty much the same sort of setup, because so imagine banking regulation without ability to lend or use the balance sheet money to do other stuff, which you can do as a bank. So I think you're right there. The eMoney accounts probably hold 10, 15, 20% of UK population money. If you look at the amount of accounts there, so there's 60 million people in the UK, say what's called 50 million of those are able to have bank accounts, and Monzo have sort of 6 million accounts, and that type of thing. So the eMoney now equates to an awful lot of potential systemic risk within the UK, and perhaps it needs to grow up in the regulation to reflect this sort of lightweight banking, and then it gives a really nice sort of regulatory route, and especially post Brexit, to because the UK is very good at leading on regulation, from small eMoney to banking light to full bank. And I think then everybody's protected, and the most important person is consumer, and you probably won't have these situations like the FCA had to act with Wildcard.
Sorry.
Okay. So you're entirely correct. Regulation probably does need to change now and grow up on that.
Yeah, I was going to say, because it's quite interesting if you look at sort of the prepaid card solutions and those solutions that do sort of rely on eMoney. A lot of the customers and the customer profiles are those who are either sort of millennials just getting into banking for the first time, but also include quite a substantial amount of people who haven't got a sort of a full-blown bank account, if you like, or fully licensed bank account, because it's they're part of potentially or were part of the underbanked, but it's actually helping them as a stepping stone to get into banking, which is an amazing thing. Do you feel that, given that what happened in June, the communication to those customers was sufficient? And I know a lot of the communication, the distribution of that, I suppose, was pushed out via the providers, so via Anna Money and those guys. But is that fair, or should the FCA actually have done more? Because I'm just I'm sort of whenever I hear of Curve, when they talked about their sort of 48-hour stretch when they sort of moved providers and all this, you actually feel like there's quite a lot of sympathy for them, because they, it was sort of events out of their control. So I just wonder how, from a communication perspective, that sat with you.
Yeah, I'm totally with you. The regulator put the situation in play, and I think needs to be able to communicate as into the why to do something, and has a responsibility. Can't just, I think, fire and forget and say, we're doing this, industry, sort yourself out.
Yeah,
we've got to work harmoniously together on this, including communications, because I mean, there is Pocket, for example. Viraj, when you first set it up, gave me one statistic: that 6 million unbanked or underbanked, or was it unbanked in the UK, and we're a first world country.
Yeah,
and so a lot of the impact was people who needed their money, and some of these people do live, and it's shocking to realize that in the UK today on a day-to-day basis.
Yeah,
and things. So yes, a lot is there's a lot of good in the sort of, as you say, prepaid world, or let's call it the neo banking world.
Yeah.
Because some of them aren't prepaid.
Yeah, true. Yeah. I've made a quite generalization there, I know.
But it's and because they're serving a good segment started, that the economics of say Barclays, where you have $350 acquisition cost, $250 lifetime value, you're out of whack if you're not going to bank these people as well, and then your risk systems probably can't handle them either. But so that is the communications, I think, could be, in retrospect, could be done. But sometimes, like COVID and other things, when you haven't done something before and you're dealing with something right in front of you now, you've got to make a decision. And
Yes.
One thing, my father's military, and a very good colleague of mine, Craig Heimark, was on the board of UBS and used to be board of my first company, and just stepped down from the board of Deutsche Börse. Decision making's, you've got to make decision what's in front of you, and if you don't make a decision, you get worse outcomes. You got to make a decision, you can change the wrong decision and move it on. And I think the A-level thing is a classic thing. They try to make the right decision. They weren't trying to be evil, I don't think, government, but they've changed it back again. It's upset a hell of a lot of people, understandably. But sometimes if you're only dealing with what's in front of you, you can understand decision-making process, because in retrospect, it's so easy to say, why didn't you make this decision?
Yes, of course.
That's information I had. So I think definitely regulation does need to grow, and I think the industry is totally up for that, for change and moving it forward, because we want UK PLC to be a great place that attracts businesses for regulation, safety, and other things going forward, and show the forward-thinkiness of the UK market. I think led by Charlotte Hogg when she was at the Bank of England, to open up the payments networks and everything, and that really has changed the world of finance.
Yeah, and it's interesting because I'm just via the role of 11FS, we get to speak to banks all around the world. From a services perspective, they do certainly look at expertise coming out of the UK as something which is at the forefront of banking services, and all the neobank, the sort of the movement has helped that. But one country where you're normally domiciled, that has sort of led the way in this in particular is Singapore. Maz has had quite an interesting approach to this kind of, I suppose, shift in banking that we could potentially learn lessons from. I didn't know whether you wanted just to expand on that a little bit more, and what potentially we could learn from what they've put in place.
Sure. Masses and also Luxembourg have
We've lost Nigel again. Disaster. I will say that from oh, Nigel, you're back. We can hear you, but we can't see you. That's all good.
There we go. I want to say one area of that I think UK, that Singapore's done one, says Luxembourg. They have legislation for material outsourcers. UK's got guidelines, but they've got actually a regulation. And Wirecard, ourselves, anybody in our industry who's a platform, I think also needs heavier regulation, because we have responsibility for these guys sitting on top of us. We have 26 neobanks sitting on top of Railsbank. And so there's 26 client bases we're essentially responsible for on keeping the lights on. And so and safeguarding the money for the ones that are under our regs, and also making sure the payments and everything will happen for the ones that use their own regs. So I think Singapore has this, and we're compliant with it for one of our customers, Sing Life, where we're the sort of material outsourcers from a technology and operations perspective to operate their essentially their deposit product and their card product that goes on the deposit product there. And that, I think, would be because the industry has changed to platforms. Because just look at the economics. If you're starting in Monzo again, you'd have 9 to 12 months, and your colleague Will White will tell you all this. You have 9 to 12 months and $2 million before you've got a customer. And everybody's repeating that. That means there needs to be an infrastructure play like platforms, and it gets you down to 6 to 8 weeks and a few hundred K as opposed to such sort of expenditures. And so that regulation, I think, needs to catch up with that as well. And Singapore has done that. Now, Singapore's also done this digital banking license thing, which is just out of interest. That's a full-blown banking license without branches and has certain restrictions. And they've also got the equivalent of the eMoney thing, which is just passed through the financials, where it has now been passed into legislation, I think, January time. So they're sort of looking at it from two ways of how to have solid, lightweight banks and a market of 5 million people. Of which, 5 million in totality of people there, because of 1 million what's called foreign domestic workers, so they're just coming in back and forward. 5 licenses is probably appropriate, if you see what I mean, because it's a market. But it's interesting showing this concept of digital bank. That Wyoming has got a similar license where it's a digital bank that can access the Fed for clearing of US dollar, but you can't lend on it. So it's like eMoney plus, and that I think is probably a trend we need to see if we can get the regulators around the world to support, because lending can be done by other mechanisms. Consumer lending, Consumer Credit Act, for example, you can lend via that rather than bank. You just don't use your balance sheet, use somebody else's loan fuel. So you can assemble these pieces together to give a retail product that actually works. And just the only real reason you need a banking license is it used to be cheap cost of capital, but when in a world of negative interest rates, capital costs have come down massively. And will be for the next 20 years when we recover from COVID's economic impact. So.
Just very quickly, because I know we're coming to the top of the hour, and I don't want to keep you longer than we were scheduled to do, but we've had a flurry of questions in. I'll just ask you this one from Rita Martins. Thanks so much for asking this. How can customers protect themselves from future similar situations, obviously such as Wirecard, and who should communicate to them? So we talked a little bit about that, but in your opinion, where should the communication come from?
Communication should come from the regulators why they've done something. Everybody, and it's just the fundamentals of communication. If people understand why you've done something, they may not agree with it, but they understand it. When you just do something and don't communicate and put it down to the companies without clear guidelines, consumers or anybody, human beings, get confused. When you get confusion, you get fear, and it's just the nature and the behavioural response to a communication. So I think the regulator and the industry should have communicated why we're doing this. It's to protect you, and here's why we're protecting you on it, and admit the legislation's out of whack, and bear with us. and we'll get you back up. We're trying to do this in their best interest, for example. Sorry, carry on.
No, I was carry on.
I was just going to say, consumers protect themselves. Just make sure your companies are regulated. You can see them up on the FCA's website.
Yep.
And I think the FCA is also doing a good job now of making sure people communicate to their card holders, account holders, exactly what their obligations are, the safety, and they're not trying to market something they're not. And the FCA is on top of that, which is a good thing to see as well.
Cool. Nigel, thanks so much, because we are at 9 o'clock. That was much appreciated. I've sort of had, again, there was other questions. Dan Feeney, I'm sorry I can't get to your question. Si's also chucked in all sorts, which we can.
Dan always asks questions.
He does.
Okay, I know him.
He does, but they're great. They're phenomenal. This one was around fraud and identity verification and protection, but we're kind of on a different topic. But Dan, I will field that after. But where can people find out more about yourself in terms of if they wanted to get in touch with you? Obviously Railsbank, but
sure.
if you're entertaining that.
I'm the only Nigel Verdon on LinkedIn, so LinkedIn is the best thing.
Fantastic.
And no recruiters, please. No recruiters.
Yeah, fair. I know how that goes. Listen, thank you so much for joining me again. Much appreciated. And that is all the time that we've got for today. Join me again tomorrow. I'm joined by, as Nigel said, Ned Phillips, CEO of Bamboo, which would be really cool. So we're looking at the Singapore fintech scene as much as other conversations that we're going to have, I'm sure. So I'm looking forward to that one. Thank you so much. That was great.
Thank you. And good luck to Ned tomorrow. He's a great guy.
Fantastic. Thank you.
Okay,
awesome. See you soon.